Today we're going to be looking at the three most popular Chinese stocks. That's Alibaba, Tencent, and JD. And we're going to be looking at the real reason why they're crashing. If you want to see more videos on Chinese stocks, get this video to 100 likes in 48 hours and I will release a deep dive analysis on Alibaba. So getting right into it, I've been sitting and thinking about what's been going on with the whole Chinese market recently. And apart from the obvious trade war and tariffs that have been going on between the US and China, there seems to be some fundamental changes in some of these businesses, especially the three that I mentioned, that could be helping drive these prices lower. So let's start off with Tencent. The first piece and biggest piece of bad news here is that Tencent reported a slowdown in their earnings for the first time in 10 years. Net income for this company was actually down 2% year over year, and this came as a shock to a lot of investors, which helped push the stock to its 52-week low. Then after this, we kind of recovered from this, and then we saw more news come out that went against Tencent, and that is that the Chinese government has begun cracking down on gaming in the country. They essentially want to control and reduce the number of hours that people spend, especially kids, on gaming, and they also want to control how many new games are released in China every year. And this of course affects Tencent because they have ownership stake in some large games like Fortnite, for example, and with this being reduced and the number of hours spent being reduced on these games, this is surely going to affect Tencent, at least for the short term, where their revenues and profits will most likely take a hit. And so far, Tencent has been complying with the government. I mean, I don't know if they have much of a choice, but you don't really want to go against the government here, especially in China. And they're even shutting down some games and helping the government with ID checks that are being requested. So as an investor like myself in Tencent, it actually raises a bit of a concern here. They already missed on their earnings for the first time in 10 years. And the reduction in game time that users in China are able to play, it's surely going to affect their bottom line and surely going to affect their revenues as well. So really, the future earnings in Tencent could also be misses. But that being said, looking at the more bullish case, gaming is only a portion of Tencent's revenue, so this might be a short-term blip for the company. But again, because of the old macroeconomics and the trade war pressing down on this company, and other things like their earnings missing and the government cracking down, there's just a lot of negative going on with Tencent and their business. So just keep in mind that recovery in the stock is most likely going to happen over the long term, but it might take longer than expected. So if you're a short-term thinker, a short-term trader, you might want to be cautious with Tencent. Now let's move on to JD.com. If you look at JD as a business, they have tons of potential, tons of technology that is world-class, and also tons of support behind them. In fact, Walmart and Google are two large US companies that are both invested in JD. But the stock looks like it's fallen off a cliff recently, and we're actually at prices that we haven't seen since 2016. So what is really going on with JD here apart from the obvious trade war and tariff war? If you haven't heard, their CEO Richard was recently arrested in the United States under some allegations, but was then later released and now he's back in China. These allegations though were fairly serious and it actually contributed to a very steep sell-off in the stock after it already had a very poor 2018 so far. So as of recording this video, the case is still technically remaining open. They're still investigating, and JD as a company has said that they will comply with the US with whatever they need to figure out what really happened and what these allegations were about, if they're true, or if they were just something fabricated by an individual. But as it stands right now with this case, it doesn't look like anything new has really come out. It's been about a week or so, so it might be safe to say that this case is kind of closed. It might be confirmation that this was just a misunderstanding. That might help rally the stock, but at this point the damage is pretty much done. But anyway, this has kind of been the biggest catalyst really for the company recently, and it's put a negative light on the company as a whole. The fear really that investors have is that if this is true, this might lead to him actually leaving the company. This is the guy who actually founded and is CEO of the company. And that could be really bad news for JD moving forward. Looking at the long term though, similar to Tencent, this is most likely a perfect opportunity to get into JD at a very cheap price. That being said though, right now it is looking like a falling knife, so it could go a lot lower. It could stay at this price for a while. We really don't know, but again, the macroeconomics is also helping push this stock lower. So before we get into our third stock here, I want to remind you guys that we do have a VIP membership group. In there you can see exactly what I do with my positions. I have made changes to my portfolio. There is a new number one stock, and that's right, the next stock I'm going to be talking about, Alibaba, is no longer my number one stock. So if you want to get full transparency to my portfolio, see exactly what trades I make for the long term and the short term, make sure to check out the link in the description below. But anyways, now we need to address the most popular Chinese stock in my opinion, and that's Alibaba. So Alibaba actually reported their earnings recently, and they had stellar earnings. I made a video on this, and it was just absolutely impressive as to how well they did in the last quarter. They reported strong numbers, strong growth, and they really impressed investors across the board with their numbers. However, even the almighty Alibaba suffered from the macroeconomics, and the stock still sold off after reporting such strong numbers. And of course, what other reason out there is helping the stock move lower? Now, if you were around this last weekend, I did make a video, and that was about Jack Ma, who is the chairman and the founder of Alibaba. He actually plans to step down in a year and hand over the role to the current CEO, Daniel Zhang. So this, of course, is a big fundamental change. He is the guy who founded this. He's kind of the face of Alibaba, even though he's not the CEO. And really, Jack Ma leaving the business could be a big hit to the actual brand overall. That being said though, he will remain on the board of directors, so he will have influence on the company, how it operates, and he can still have a say in making decisions with the company. But it does kind of show you that his focus is not really on this company anymore. He does want to focus on more personal things moving forward. So that again spooked investors and kind of helped Alibaba move even lower. I'd really be curious to see what happens with this company over the next year or so as this transition happens. But I think for the next year, this will kind of be a rocky stock because we aren't really sure where the management wants to take this company. We do know that Daniel Zhang, the current CEO, has done a very good job on the company. But having him as a chairman might mean that a new CEO is coming in, and we have to judge how this new CEO is going to be. So again, a lot of uncertainty with this stock, in terms of his management at least. So that's causing a lot of uncertainty in Alibaba as well. However, looking at all three stocks, I would say that Alibaba is actually kind of the safest and had the least affecting news to the company. Changes in management happens all the time. It's something that's expected, and yes, the market is going to react to that in the short term. But over the long term, it's still a very strong business. Nothing changes in the fundamentals of the actual day-to-day business. JD and Tencent, however, are suffering from more negative press. JD with the whole CEO allegations, and Tencent with actually missing on their earnings. Until JD can actually go in and clear up everything that's going on with their CEO, that can actually leave a big dark cloud above the company, because the potential for a CEO who founded the company, who's the face of the company, who may be forced to leave the company, can really impact the stock. But that being said, no matter what these companies do, it seems in the short term, whether they report strong numbers, strong growth, doesn't really matter across the board. The macroeconomics, the tariffs, the trade war, they're pushing these stocks lower. So in my opinion, until that uncertainty is actually resolved and we actually come to a conclusion with these tariffs, we can expect these stocks to move lower, maybe a lot lower, maybe just a bit lower. But I do think that they will kind of remain in a bear market until this is cleared up. Hope you guys enjoyed this video. Don't forget to subscribe down below, and don't forget to get 100 likes if you want to see that deep dive analysis on Alibaba. Either way guys, thanks for watching. Don't forget to invest positively, and I'll see you in the next one.